Good Monday morning. Thank you so much for joining us. I'm Zach Lajway. We have a lot of important news to get to this morning, including our weather coverage. But first, we're going to spend time talking about the complicated process of buying a house. If you're shopping for a new home, you already know mortgage rates have skyrocketed. The average, 7.36. Again, this is just the average. Some mortgage rates are even higher, but there is a way you could secure a mortgage rate of just 3%. Consumer investigator Bill Spencer is here to walk us through this conversation. Joining him is Bill Baldwin, HAR board member and real estate agent. Gentlemen, good morning. Bill, I should say the Bills, you both have our attention. Good morning.
Hey, good morning, Seth. Thank you. Yeah, so folks, what we're talking about are assumable mortgages. That is the way to get one of these incredibly low interest rates. You have to be able to find one, and then you have to meet the requirements to do it. But in essence, Bill, describe for people, construct for them how a assumable mortgage works in simple terms.
Most people didn't realize that federally backed mortgages are assumable. So almost 65% of mortgages that we have today are assumable by individuals.
You could say, okay, 65% of them are assumable.
Even veterans loans that were made to VAs are assumable by non-veterans.
Okay, and an assumable loan, just so you guys understand, is basically where you go in and you assume the home buyer's loan, okay, at the same interest rate that they got, on the same payment schedule. Everything is the same. Now, the downside here is you have to pay whatever they've got in equity on that house. You've got to pay them for that. That becomes your down payment. So if they've been in the house for 20 years and they've got $300,000 in equity in their home, well, then your down payment would be $300,000.
Plus whatever their appreciation was.
Plus the appreciation. Exactly right. But here's the way around that. What you want to do then to find a low mortgage rate like that 3% interest rate and not have to pay some sky high down payment, the way you beat that is you try to find a house, right, that was sold, you try to find a house that the seller bought back in like 2018.
During COVID, 2018, 2019,
2018, 2020. And they could have an interest rate as low as, say, 2.8, 2.9, 3%, 3.5%.
I locked my loan in at 2.25 on a 15-year note in 2020.
Okay, how much?
2.25%.
Okay, there's an example, okay? And how much equity do you have in your house right now?
About $250,000.
$250,000 on your house. I'm assuming it's a pretty expensive home.
That was a lake house I bought for $500,000.
Okay.
I bought it for a little over $400, put about $100 in it, and so there's about $250,000 worth of equity. Someone could come in and assume that loan at 2.25 on the 15-year note. Yeah,
but they would have to pay him $250,000 like a down payment.
That's correct.
Now the way around that is to, of course, buy a cheaper house. But for example, we focused on a couple in my story that got a $400,000 house, right? Mm-hmm. It was originally bought in like 2020, okay? The seller only had $63,000 in equity, right. So the down payment became $63,000.
Right.
So that's what you want to look for. You want to look for a house that has a low interest rate of like 3%, okay? And a house where the people have only been in there a few years.
They don't only put a nominal amount down, 5 or 10% down when they bought it.
Yeah. You want to find a person that doesn't have too much equity in that house. $50,000, $40,000, $60,000. That becomes your down payment, and that is high. But your interest rate is going to be 3% or less for the next 25 years, and you're going to save a ton of money. You could save hundreds of thousands of dollars, actually.
Buyers just need to ask this question, and sellers just need to promote that these loans are assumable. Texas Realtors just put out more information about this so that realtors are more aware of it.
Okay.
The downside to sellers is that it takes a little bit longer for these buyers to get qualified. It's not like a traditional time where you already were pre-qualified. You're going to have to go back and get qualified from the lender that they have, and so that process takes more than 30 days. They're telling us plan on 6 to 8 weeks for that approval process versus a traditional 30 days if you were already in the marketplace. So it might take the seller a little bit longer,
right,
but the buyer might take a little bit longer, but both can reap huge benefits.
Okay, good. Well, so one of the questions that our viewers sent in was, if I am selling my house, should I advertise it as assumable?
100%.
And why?
Because that's so attractive to these buyers today. We have what's called the lock-in effect. So many people want to buy a house, but they won't buy at 7% interest rates. But if they knew they could assume a loan at 3, 3.25, 3.5, they'd be more apt to look at houses and go ahead and take the plunge.
Your house would be much more in demand if you advertise it as assumable, right?
Totally, 100% more attractive than other houses that are not advertising that fact.
Exactly. One more thing. Another question somebody wrote in is, how do I find an assumable mortgage? Because a lot of them are not advertised this way.
A lot of the consumers and even the realtors don't know that they are assumable. You almost could assume that it is assumable under certain circumstances. Most loans backed by the government are assumable. There's very few private lenders that lend money during that COVID period. It was federally backed funds or whatever.
Good.
And so those programs typically are assumable. People just don't know it.
Exactly. So what you need to do basically is, it's going to be very difficult for you to do this all by yourself. So you need to get a real estate agent, right, that's helping you find your new home, and you tell him or her, your real estate agent, that you want an assumable mortgage, and then she can contact the seller's real estate agent and find out if you can do an assumable loan, which is going to save you, again, not just tens of thousands of dollars, it could save you hundreds of thousands of dollars over the life of that loan.
I was just in the Woodlands recently, and many of those homes were advertising the fact that they were assumable, and that was very attractive to my young couple.
That's great. Yeah. Did the couple buy the house yet?
They haven't yet, because it's very competitive. Those houses that offer those assumable loans attract the most buyers, which makes it a very competitive environment where people are paying over the asking price for those assumable mortgages because they're that much more attractive.
Paying over the
list price.
The asking price.
Yes.
Right. So keep that in mind. If you're selling your house and you can sell it as an assumable, just like Bill just said, you could ask for well over the asking price and probably get it.
That's right.
Because your house is going to be so much more in demand if you can sell it, right, with an assumable mortgage.
100%.
Okay. Make it clear, though, for people, a conventional mortgage cannot be assumed, right?
That's right. I mean, you're going to have to go through the process of finding out if it's assumable, but you would be surprised how many loans really are assumable.
That's fantastic. Yeah. Beautiful. Bill Baldwin, thank you very much.
Thank you.
Bill has decades in the real estate industry. He's been a broker as well. He really knows what he's talking about. But listen to him. He's got great advice. And check out Assumable Mortgages. See if you can get yourself one, because you're going to save a ton of money. The people you talk to, when you tell them what your interest rate is, 3%, 3.2%, they're not going to believe you. But you will have knocked it out.